Hi guys, good morning. I didn't know that my I don't know how I got disconnected for whatever reason, but I have to just start all over again. So we're back again. Please just make sure that I want to know if you guys are actually hearing me. Type in the comment section, let me know that you're hearing me, and please do well to share the link. Let's get started again. Okay, so just type in the comment section. Let's get started again. Let me know that you're hearing me and you're connected as well. I didn't even know that the video was disconnected until I was almost done. Then I just discovered that it wasn't working at all. Okay, so just type in the comment section. Let's get started again. Let me know that you're hearing me. Okay, so that's great. So I'm gonna start all over again with the dollar index. Okay, when I started talking about the commitment of traders report, how to use ChatGPT to get an idea of what the potential directional bias of an asset is simply using commitment of traders report from ChatGPT. Most traders do not know how to use commitment of traders report as a confluence in their trading, and even if they have access to the information, most people are not technically sound to be able to interpret COT data and then use it in their trading. So I came up with an idea. Since the ChatGPT is an amazing AI, why don't I ask ChatGPT to give me insight about the COT data for the assets I would like to trade? So you just go to ChatGPT and ask, what is the COT data for dollar index today? COT data is the data that shows you net long and net short position of the assets that you're trading. So assuming that you're trading Euro USD, you can ask COT data for Euro USD, and it's going to show you the net long position on Euro USD or the net short position on the Euro USD. Okay, so looking at the COT data from last Friday, because COT data are usually released on Friday, you can see that we have long position for non-commercial traders of about 23,800, which there's a slight increase from the previous week, and short position about 14,250. Okay, so commercial traders hedging have about 7,400 long position and short of about 20,100. Okay, so what is the interpretation of this data? Is that speculators, large traders or hedge fund traders have an increased net position that is indicating a rising bullish sentiment on the dollar index. Okay, so we're anticipating bullish bias on the dollar. Next thing you should do is to look at Forex Factory and take note of high and medium impact news events that you should be trading, and the ones you should not be trading, like the CPI. Especially this week, tomorrow we have a CPI coming up on the dollar index. Not tomorrow, today Tuesday, 15th of July 2025, there's a CPI 1:30 p.m. on the dollar index. Okay, on the dollar right here. So I need you guys to be patient. Just be patient and avoid trading this guy until after the CPI news release. You can always get your trade entries afterwards. Tomorrow you have CPI on GBP 7 a.m. London Open. I think apart from these two, you don't have any news events to avoid. Okay, so just be patient. Patience is a virtue every trader must need or will need. If you truly want to experience profitable trading, you need the virtue of patience, being able to stay patient, to wait for the trade setup to play out before you take the execution, being able to stay patient after the trade setup plays out and you get to execution. You also need patience to stay on that trade and let the trade play out, not cutting out trade immaturely. Like most traders do, they don't have the patience to wait till the trade setup plays out to maturity. You rather end the trade setup as fast as possible. You need patience to do that. Okay, so discipline your mind to be patient about trading and waiting for setups, the right setups to play out, leaving the trades to play to maturity, and all of that will require high level patience. Okay, so that being said, we're going to be looking at the DXY, the dollar index chart, and we're looking at the dollar index because the dollar index is the benchmark asset for all the dollar and dollar associated currency. Remember, the dollar index is the main driver. It drives price, especially for dollar and dollar associated currency. So those of you who are just newbies and have no idea what the dollar does, is that the dollar drives foreign currency. Okay, it's just the dollar index specifically. It's a reflection of the dollar interest rates, rising and falling interest rates. If the dollar is bullish, foreign currencies are going to go bearish. If the dollar is bearish, foreign currencies are going to go bullish. That is the correlation between the dollar and the foreign currency, and it's the benchmark asset, is the main driver. Okay, so if you don't wait for setups on the dollar to mature and you go about taking setups on other assets, you're going to miss it many times, because you know what, you're following the underlying assets which are only responding to dollar moves. Okay, so that being said, I remember a few weeks ago when I called the dollar is going to go bearish. Right from this very bearish order block, we said we're looking to see the dollar trade into the bearish order block, because this bearish order block is formed only after it traded into the bearish mitigation block by the left, which makes it a valid bearish order block. I think in my last sessions, my last few commentaries, I talked about how to identify valid order blocks and fair value gaps. I said the valid order blocks and fair value gaps are the ones that were created at support and resistance areas at higher time frame institutional reference points. This guy is valid because it came after it traded into that bearish mitigation block, so it makes it valid. Okay, and I remember calling it that we want to see the dollar take out that high, trade into the bearish order block right there, and we want to see it sell into the relative equal lows there, the fair value gap below. If you go and watch my commentaries a few months ago, you would see that we called this guy, we called it ahead of time, and it happened. And this is not specific to Bala Francis, it's not specific to, this can happen to anybody, just relative to your understanding of the market and your technical analysis. Okay, we're in the 21st century, and the 21st century money talks about knowledge, more money. Ignorance is going to cost you a lot, and if you don't pay attention to learning and improving your knowledge and understanding of trading every single day, guess what's going to happen? You're going to pay costly. You're going to pay to ignorance, and ignorance will take everything away from you. That's why you have people come at the end of the day, they tell you they've lost millions of money, and now they finally understand that they need knowledge to thrive and succeed at anything they are doing, not just trading. Okay, this dollar traded into a discount volume imbalance by the left. If you take a look at it right here, you'd see that there is a volume imbalance right here. See that volume imbalance, the gap in between the candle bodies, leaving only the candle wicks trespassing within each other. I call this about 2 weeks. Is it 2-3 weeks? No, about the last commentary I did, I mentioned that this guy is going to react from this level, and we may see the dollar trading to the internal range inefficiency, the bearish breaker, the fair value gaps right there, the premium fair value, the reclaimed bearish order block on the monthly. All these are potential point of interest that the dollar will want to trade into. Then the weekly time frame created a swing low 3 candle price action, with the middle candle having the lowest low, which is a very valid reversal pattern. And with this, I have a confirmation that we're about to start a bullish repricing. to take out that old high. The relative high is here, the old high, and also you see there's a fair value gap right above it that will serve as strong liquidity for me on the dollar index. Okay, so although it's been selling, but you look at the points, the key levels that the dollar is reacting off. On the weekly time frame, it retraded into a mitigation block. There's a tiny fair value gap there that we called. Price traded into it, and look at the rejection and closing right above it. It's very powerful. That's very powerful. So if we see the dollar index closes above and creates a fair value gap, maybe in the next week, if this guy trades into that fair value gap, it's going to confirm that we need to buy the dollar into the next draw on liquidity. The daily time frame will usually show us market structure that is in line with order flow. Order flow has been bearish, but the narrative now is saying that we may start to see bullish perspective on the dollar, okay, based on the levels, the key levels that we have outlined. And for us to do that, we just need to be patient, to just get more ideas, more information on the chart. And I'm looking at this gap in here that was violated, that volume gap there that was violated. Price, we may need to trade into that level to revisit it back and give us more confirmation with the lower time frame, like the 1 hour, for us to buy the dollar the more. Okay, so that level you can see on the 1 hour time frame clearly has a lot of diagonal liquidity, the relative lows there, that trend line lows. I will appreciate if I see the dollar take out all the lows there and then give me more confirmation for me to be a buyer on the dollar into that internal range. Right now, this is not a sell for me, because look at the equal high right above. If you are selling this, just be informed that there is an equal high there that institutions will consider as a sweep of liquidity, especially because there's a gap also above it. So I wouldn't advise anybody to sell. I would want to buy that repricing into internal range. Okay, so that's the only thing I'll be doing. Just wait patiently. I like to wait until I see this guy take out the low around these levels, create more confirmations, structural shift, just something like this. Take this, create shift of structure. I'm going to be buying the dollar. This should be the only thing I'll be waiting for on the dollar index. Okay, and if this doesn't happen, I don't have any business looking at foreign currency. I'd rather stay patient and wait. Then looking at gold, gold has been bullish on the monthly time frame, very bullish. We still see gold showing momentum towards the buy side on the weekly time frame. Remember, I mentioned in the previous week that as far as we do not see the bullish order block here violated, we're still very bullish. Check the daily time frame. You would see clearly that on the daily time frame, structure also is still bullish on the daily time frame. This guy has been, showing bullish on the daily time frame, and we want to see this guy. This is more like a bullish flag. Take out the relative highs right there. On the 1 hour, you look for the setup on the 1 hour, and on the 1 hour, clearly you can see this guy has been creating, taking out external range high, retraced into the bullish order block there with a fair value gap, created another structure shift. I want to see this guy take out that low, this low, and trade into that fair value gap just at the bullish mitigation. Then I'll be willing to buy gold into the drawn liquidity residing above. This is what I think about the dollar index, foreign currency, and gold asset. Please, if you have questions, you can ask me questions. You can send your questions. can write them in the comment section. You can reach out to me using the link on the description of the video also to make inquiries for one-on-one mentorship, or as well check my book on institutional trading. The link is also attached on the description of the video. And I think that will be all today. We've spent quite a good time, so we're going to be giving you updates as the trade keeps playing out. We would showcase the update on the trade setup. I hope that you have a great time trading this week, and until next time, I wish you good luck with trading. Stay safe.